Hi all, we are back once again with one more provision to be dealt about from the finance bill. Can there be a tax on something which is unknown? Can there be something which is taxed which is not known? Can there be ever a tax on something which has not been understood still? Well, the answer is an obvious yes. Finance bill brings in something what is called as a tax on virtual digital asset. Now, let us see how this provision has been first structured. Of late, the topic, I don't think it requires much introduction, but briefly let's take a quick dip into the topic called cryptocurrencies or digital currencies, which have been doing enough circles in the speculative world. I think the prices of digital currencies have been simply soaring up or have been going up phenomenally, thereby creating jitters in the minds of people like RBI or regulators across the world. So many countries have come out with many types of provisions, and we wanted to be one of the forerunners to it, so we have also brought in certain provisions in this budget. The first and foremost, now let's talk about the way the tax is structured and how the provisions are structured on this particular tax dimension. Conceptually, if we say that a digital currency is also an asset, why is it not included within the definition of a capital asset? This becomes the first and the biggest conundrum which stuck to me. And the people who have drafted the bill, they need to be commended for the simple reason they were not sure whether this can be called an asset. From an accounting perspective, we have understood that an asset is a resource controlled by an enterprise from where economic benefits are expected to flow over a period of time. Now, can you call a virtual digital asset to be something of value or to be something of bringing an economic benefit over a period of time? Well, I don't know the answer to it, which is why I think probably they carved out a new section called section 247A, where they are bringing a new definition of a virtual digital asset. The person who has drafted that definition, he again needs to be, we need to give him or award him a bouquet of flowers for the simple the way he has worded this definition. I'm making use of the finance bill provisions to read out the provisions alongside you, which you will also find it quite exhilarating. Section 247 is being inserted, which defines virtual digital asset means clause A. Any information or code or number or token not being Indian currency or foreign currency generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value exchanged with or without consideration with the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored or traded electronically. So much said in so many words in a manner which I think can be interpreted in n number of ways. I think anything and everything under the sun will fall into this. What is nicest or what is interesting is the definition itself looks very virtual, and the definition itself talks about something nowhere to now here. Now, the B part of the definition reads something like it: a non-fungible token or any other token of similar nature by whatever name called. And the C part of the definition: any other digital asset as the central government may by notification in the official gazette specify. Provided that the central government may by notification in the official gazette exclude any digital asset from the definition of virtual digital asset, subject to such conditions as may be specified therein. This I think they have brought in for the reason the RBI has also contemplated, the RBI will also be issuing a central bank digital currency, which I think this shortened as CBDC. So if they are to exclude that within the definition of a virtual digital asset, because it tantamounts to the legal fiat or the legal tender of the country, then I think this clause may be warranted. Then comes the explanation. Already the definition of virtual digital asset looks like an explanation. To that there is an explanation for the purposes of this clause. A, non-fungible token means such digital asset as the central government may by notification in the official gazette specify. B, this is the only part, the B part is the only part which is comprehensible or which is very simple to understand. The expressions currency, foreign currency and Indian currency shall have shall have the same meanings as respectively assigned to them in clauses HM and Q of section 2 of the Foreign Exchange Management Act 1999. Now, from this very definition, we cannot make out what is being taxed. We understand that things like Bitcoin, Ethereum or non-fungible tokens or anything similar to it, I think will all be taxed here afterwards. But there is also this concept called as mining a digital currency. I am given to understand that the concept of digital currency itself enshrines that there is a blockchain where I think there is so many public ledgers exist. I think that itself forms a chain linked reaction to it, thereby creating a secure database. So whatever is put in the blockchain transaction will be tantamounting to, and you can generate a currency out of it. And mining of that currency also happens. Whether that mining happens with a cost or does not have a cost to it, etc., that is unknown to me. I am not an expert in that. Similarly, how do people do trading in these bitcoins or in these digital currencies, especially or in the non-fungible tokens? There are stock exchanges or there are dealers like Vazirex, etc., where people go and enroll, or they take the KYC requirements and they buy using normal currency. They buy these digital assets. Now, whether these digital assets are belonging to India or are housed overseas, or are they carried by somebody, by a global body? No, the answer is these are all private assets, which is what puts jitters into the minds of RBI and with other people. Now, what is the budget trying to tax? Any transfer of such a virtual digital asset, if the transfer involves a money sum or even an exchange of a similar asset or a barter of an asset, considering or having a money value to it, etc., such an income or the transfer, the income arising out of the transfer will be taxed at a flat rate of 30% without offering any offsets or deductions other than the cost of acquisition. Now, that also opens another thing, and they have also categorically said under the 115 BBH provision, which is the new provision which is brought in to tax these virtual digital assets, that no set-offs, no carry forward of losses, etc. will be permitted. That also opens a new debate because of the innocuous wording which is used in the statute, whether intra-head set-off, meaning the sale of one virtual digital asset and there is a compensating or there is an offsetting, there has been a loss arising out of a sale of a non-digital asset. Can that be offset? I am given to understand, I think the provisions still give you the leeway to adjust it, but I think we need to wait for the fine print, how this will get clarified, etc. To catch such transactions, a TDS provision under section 194S is being introduced, where I think a threshold transaction value in case of any consideration flowing into a resident from any person, I think will attract a TDS obligation as long as the amount is exceeds 20,000, and in case of specified individuals or like people having tax audit cases, etc., the threshold would be 50,000 rupees. Now, the TDS provision, we can understand, it's very simple. It is there to catch anyone and everyone to create a trail and the record to it. But what I find it still very hard to digest is the people who have drafted this, they have neither called it an asset, they have neither called it a particular resource, they have not called it to be that of an extinguishment of an asset, a sale or relinquishment. They have simply used the definition of transfer. They have not brought it into the capital gains provision. They have kept it into a carved out provision under 115 BBH. Apparently, as a finer print, I wanted to share a very innocuous story to it. The number of sections under the 115 heads is close to 100 provisions as of now. I think there will be very soon a section which might read 115 blurb, BLURB. Don't be surprised if you get, because the way the sections are getting proliferated under section 115, I think it sends shivers through one's spines. But coming back to the concept of virtual digital asset, the definition is so innocuously worded that nobody would be able to figure it out. but they will all understand that what cannot be taxed anywhere and everywhere, or what exists or does not exist, what remains only virtual, what remains a mirage, all that can fall into the definition called virtual digital asset. So welcome to the world of virtual taxation. Have a nice day. Bye bye. We will see you in one more session on something similar.